What's going on, guys? D. Anthony here with evolutiontraders.com. We're going to do a little market update. Today is March the 5th. Market is currently closed. Now, we finished the day down 278 points. Just a little over 1.5% down on the NASDAQ. Now, at one point in time, we were closer to 340, 330, 350 points negative. Market did test the rising 20-day moving average. That's the purple line that you guys can see on the screen here. Successfully tested it, broke it, and then bulls stepped in. Now, what I want to kind of go over here is look at any time we've tested over the past couple of months this 20-day moving average. This particular time, we lost the 20-day moving average, had a 3-day sell-off before the recovery. We lost and tested the 20-day moving average here in the middle of January, followed by a recovery. We tested the 20-day moving average here, followed by a new high. We tested the moving average, 20-day moving average here for 3 to 4 days, lost it for 2 days, and then put in a new high. So this is almost textbook, okay? Textbook bull market, okay? And if I was to go back in the chart, you're going to see a lot more of the same action. Now, does that mean that we're going to test it, maybe, hang out in this range for 1-2 days and then put in a new high? Maybe. But as a trader, we want to be prepared on both sides of the market. So because today's range was so extended, we need to be prepared that we might possibly have 1 or 2 days of inside trading action where we kind of don't really get out of the range from the lows. We don't really put in a new high and we kind of go sideways. If that's the case, what I do is I size down, meaning I cut my position size in half. I look to take more scalps instead of longer trades, and I look to get in, get green, and just get out, okay? Protect myself. Whether it takes 1 day, 2 days, 3 days, doesn't really matter. All I'm looking for is a smaller time frame setup on the 5-minute time frame. I'm going to look to take smaller position sizing, so if I'm playing 1 mini contract, normally I'll play 5 micros. If I'm playing 5 micros on that particular setup, I'll play 2 or 3. So I want to limit my risk and my exposure, and then I want to take profits a little bit quicker. So if I do normally look for, let's say one play sets up and it's on a 5-minute time frame and it's a 30-point range, instead of myself looking for the full 30 points, maybe I take 15 or 20. And the reason why I do that is I just want to have a high win rate percentage while limiting that exposure and that risk, and then just try to let those days pass by so, we can eventually get out of this range. Now, what I do want to notice here is that if we gap up tomorrow or the market starts shooting up green, if we do not take out today's highs, and let's say we gap up or the market opens and we start to push higher, I'm going to let off of the longs. I'm going to let them go. I'm going to see where on the hourly time frame are we coming into supply, where potentially could we get rejected. And if we start to chop around and we lose today's lows, I will take that short position. Through today's lows, we have room. Okay, let me kind of change this cursor around. Today's lows is sitting at 17,832. If we start to confirm these lows, I'm going to look to take profits, look to short and take profits into 17,670. So that's going to give us around 200 points worth of room. Now, 200 points of room is coming from today's lows into this linear regression. It's not that big of a gap. However, it's 200 points and there's more than enough room to kind of get in there and make 20, 30, 40 points and kind of call it a day. Now, this whole uptrend really doesn't start to get broken until we close below 17,666. That number can change. We've tested the linear regression once. We've tested it twice. We've reclaimed it here and we reclaimed it here. So you can see, just going back over the last month and a half, anytime we come down into the linear regression, either we break it or we kind of trade down here and then we put in that new high. So I'll be looking for the short below today's lows into the linear regression, and then once we get down in this range, I'll let it do whatever it wants to do. And if it starts to push up, like we get this hammer candle here, look for the following day to go long. You come down into the linear regression without losing it, look for a green candle to take out a previous day's red and go long. Same thing here. Once we close back over the linear regression, if we do lose it, get in on the following day, so forth and so forth. So As of right now, the bulls are still in control, even though today was a down red day. But just go back in time. Go back on the daily chart. A couple red days down here, big pop. Couple red days down here, big pop. Right? Couple red days here, pop. Few red days here, pop. So what we're looking at is the second red day. If we have one more red day into this linear regression, look for the third day or fourth day to be a pop back up. And if that's the case, you want to be long into the new wave. And if we do close below this linear regression, what we would be waiting for is a pop, rejection, lower high, and then taking a confirmation of that new low in this linear regression channel. And from there, we've got a lot of room down to make profits. I hope this video helps somebody out there. Again, if you guys want to trade with me each and every single day live and get access to all of my strategies and the community and the lessons and the one-on-one coaching, that link is down in the description box below. I'll see all of you guys on the inside.